Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. And we are seeing markets back down again after a historic rally in the prior session. So stocks across the board going on a bit of a dip as we see investors getting more worried about what's going on. And maybe even that short pause he has announced might not last, or they are focused on China's tariffs. Those levels now at 125%. So that's something we are weighing as we see the S&P 500 selling off 3.5%, the Nasdaq Composite down 4.3%, the Dow Jones Industrial Average dropping over 1,000 points or 2.5% lower. So lots of red on the screen right now going into the Asian trading day. And to help us navigate what's going on, we've got Sean Teo. He is the sales trader for SAXO Singapore. Sean, good morning. Happy Friday.
Good morning, Ryan. Happy Friday. Crazy markets we are currently in right now.
Yeah, not too happy when it comes to the markets. Walk us through what's going on in terms of the drivers of what's weighing on markets today.
Okay, so I think there were kind of two things, but the main one, and not surprisingly, is still the tariffs. So the trade war, or like the tariffs between the US and China, this really is not working out very well for the financial markets, but I think it's really yet to take into effect. So I believe like what Trump is actually really doing is he was actually trying to send a message to the entire world. I believe these huge tariffs eventually will probably come down to a smaller extent, not like these 100% or close to 100% tariffs that China and US are raising against one another now. China also usually has I would say, relatively more stable to neutral stance in terms of tariffs. They are usually the ones who are actually willing to work things out. But Trump, has always been a wild card. Even in 2016 when he was president. So I believe what Trump has already done is that he has sent a message to the entire world. So now that he's done that, I think it's more of what kind of deal that Trump and the US can come together with the other countries. And ultimately, you have to know that Trump is actually a businessman. He's not an economist. He's not one that's actually very into the economy. So hopefully he does create good deals for the US, and all these volatile markets or these tariffs start to come down to a more manageable benchmark.
Yeah, talking about what is playing out in the markets in terms of, for example, the Chinese currency, the Chinese yuan, that's fallen to its weakest levels since 2007. What do you take away from this? What is happening on that front?
The Chinese yuan devaluation is one of the methods that the Chinese can actually use to control the economy and the financial market. So usually when the Chinese yuan is too strong, that would naturally not be good for the exports, because their goods will naturally not be as attractive to those people who are exporting the Chinese goods. So as of now, I believe the banks in China were actually selling the Chinese yuan to actually get it slightly weaker, because the fixing was, I believe, was actually quite a bit lower due to all these tariffs. Chinese government are still looking to make their goods attractive.
Okay, so you got a couple of options that China's looking at closely, and of course services as well when it comes to the restrictions they could place on imports from the US. So lots to watch out for. What's the impact on the economy down the road? What are markets pricing in when you talk about a global slowdown or a recession? What's the scenario right now?
I'll say I think markets are now all very jittery. I think there has been quite a bit of risk-off sentiment. However, that's really not playing in your traditional way, like how you see the bond markets are performing. Because you have to also note that China is actually the second largest bond holder, so they do have a weapon in their arsenal to actually cause some movements in the bond market. So naturally, you will not see in risk-off environments, you see the bond markets moving upwards because people are piling into bonds. But however, if you do look at the other instruments, like say the Japanese yen, the Swiss francs, and gold, these have actually been moving in how usually the safe haven environments or the risk-off environments would usually act out. So I think markets are still now pretty jittery. You don't see people piling into risk assets. They are not willing to take as much risk. But I have to say that I saw some sources online that has been a fair bit of net retail buyers who are actually piling into the market when the market actually drops. So it seems like we may not have seen a true blue capitulation yet, something like the 2020 COVID. So I think people are kind of wary to see whether the markets will still come off further from here.
Yeah, the bond vigilantes apparently are helping to punish what they are seeing right now. So that could be one of the factors to watch out for. And talk about what to watch out for. We've got the earnings season kicking off tonight with the banks. What is going to be the situation when you look at how companies are going to report their earnings and the guidance? What are you looking out for?
Okay, so I think regarding the earnings, like what the earnings are going to be for last quarter, would not be surprising if we still come to somewhere like within expectations, but more importantly, what they would be providing for their guidance. So currently, I see that analysts have actually cut the forecast from like 11% down to now just 6%. Because there are actually recession and growth fears. So different companies are likely going to have like different strategies in the face of these current tariffs. But then again, ultimately, it comes down to the pricing power of the companies, the profit margins, and overall demand for like the goods and services that these companies actually provide. So different companies would naturally have a slightly different elasticity of demand for their goods. So whether these companies are able to pass on these costs to the customers and how much of their goods are being demanded would be pretty key. So the company guidance would be important to see how confident the management are in navigating these current environments.
All right, lots to watch out for as we navigate the earnings season, and helping us to give a snapshot of where things are right now, Sean Teo, sales trader for SAXO Singapore. Sean, thanks for your time and have a great weekend in advance.
Thank you so much for your time, Ryan.
Catch up with you again soon, Sean. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.